Henrik, Monday morning, first thing. I'm in Arizona, and I know you're on the other side of the world, but thank you for doing this.
Thank you for having me on, Michael.
So many different directions we could start with this, and one of the first things I looked at this morning when I get up is I'm drinking my coffee, and I'm like, okay, what are the precious metals doing today? And I
Yeah.
looked right before we started. It was we're looking at almost $4,000 an ounce for gold.
Yeah. Amazing.
I What are your thoughts as you're seeing this thing climb? And I've listened to some of your other interviews. For people that don't know, though, what are you thinking when you're seeing this?
Well, obviously, I mean, there's some greater things going on with gold and silver. I have famously or infamously been saying that we should see a rather large drop, and you could say that I did not see this move to the kind of the extent that we see right now. I will say though that I think the situation is a little influenced by the whole narrative of inflation that has been going on for quite some time, saying inflation is here and inflation is here to stay, and that's why gold will go up. I think that the what I'm looking into is that what comes after this when we see the bust of the bubble, and there is a bubble right now as I see it in tech stocks. I mean, it's just I kind of refer to it just as the bubble because it's something that I think is so clear that so when that bursts, what is going to happen then? And especially with the size we see, then you're probably going to see that there will be a demand for dollars and for the they're going to see the Dixie going to move up quite a lot. So I think the rally that we have seen has been quite extraordinary and much higher than I expected it could go. When it started, actually, I thought it would started a decline before what we see here. Absolutely, but actually, when the dollar is starting to rally in not too distant future, I think you're going to see quite a large pullback in the dollar in gold. So I think things have been front run a little here in terms of the how long and how far gold should be moving up and silver as well. But let's see what happens into the situation where you see the floor kind of opens up and the what you really need there will be dollar by the end of the day. So, but dollar just you're getting to one another point here also. If you look to gold versus SPX for instance, and you see that ratio SPX versus the dollar, you will see that there is a big big break of a significant area. We've only seen that four times or three times before, actually. So this is the fourth time over the last 100 years. So there is something happening here, which basically maybe have to do with the monetary system, or it has to do with the massive bubble that we have in the stock market. And I think it's maybe a combination of those two.
Well, that was going to be my next question: is what do you attribute to this? Something that we haven't seen. I mean, when was the last time we had a scenario similar to this, in your view?
Yeah, but I'm not in the camp where I think we have. I mean, I think we have a new inflationary regime going on. What do I mean about that? If you look for ever since 1981, you have that Volcker, famously killed inflation by hiking rates, and you saw inflation was trending lower for the next almost 40 years, then to 2020, and then you had ups and downs, but then you saw it down into the Corona situation, and you saw how the stimulus came out from all the central banks of the world. Everybody got a check. Also, I also got a check here from the Danish government and saying, "Hey, you can spend this money." And what happened was that we saw the supply chains breaking down because people were not allowed to go to work. And so when you have that, obviously you get inflation, which is not so surprising. And then you actually saw it spiking up quite a lot. And now you see that the problem is that inflation that has occurred is not something that is going to be pulled back. It's not like the business are saying, "Oh, you know what? Now we're going to take those prices down again." That's not happening before they really need to. So the thing is that we have seen this move higher in the inflation level or the price level, which is now hurting the consumers out there, as I see it. So I think we have seen a move higher in inflation, which even though we're going to see it moving down again after into this what I call the bust here, then I think you have had a new regime coming on, and this new inflationary regime is for the next decade or 2 decades, where we're going to see that the inflation levels will be going higher from where we not are today, but where we probably are in let's say a year from now, because I do think that inflation will drop a little more or quite a lot more actually into this into a bust.
Do you so? As we continue to talk about gold, what is silver's role in all
Mhm.
this? Because where I screwed up. I mean, I wish I would have bought some silver when it was $30 an ounce, and now last time I looked today, it was over 47.
Yeah. No, I think that there is a obviously there is a role for both silver and gold, and but silver has more of industrial use, I would say. But gold has more has to do with the soundness of the monetary system, I would say. So I think the it has to do with what we're seeing, that there'll be a lot of Asian countries and people in central banks who actually know what's going on here, that at one point we are going to see a cleanup of the whole monetary system, and I think that will by the end of the day have to do with gold. And I think it's also, I mean, my target for where gold can be heading is $35,000 at an ounce going into the mid 2030s. I don't see any reason why we wouldn't get to something like that. It's just that, will we see that in a straight line, or will we see a rather strong pullback? And I think the move is there taken. We can see that the move is there for much higher levels in gold and silver. But how much of a pullback can we see before that happens? That is what the question is, as the dollar is going to soar, because I think you're going to see a very strong dollar going into 26.
This episode is brought to you by Vaulted. Launched by McIlvaney Financial Group, with Vaulted, I literally just tap a button and I own physical gold stored in a professional vault. Vaulted is offering all of my listeners $50 of free gold when you click on my sign-up link. They have a tool called Vault Plan that allows you to passively add your gold position every month. Just activate it for 6 months and you will get $50 of free gold in your account. Click on the promo link in the show notes or go to vaulted.blbvux.net/coffeeandamike. So if you anticipate gold to potentially go to $35,000 an ounce by the mid 2030s, where do you see silver then?
Yeah. Well, I haven't done any kind of analysis with the same kind, but obviously it will be similarly as high. We will see that the precious metals are going to move much higher. What I think is going on right now, Michael, is that we have a situation where the central banks of the world have been pumping up and pumping money into the system. I think we can all agree on that. And that will start to circulate at some point, and we will potentially see inflation moving higher. And I think we have gotten to that point. If you start to see, if you look at the crossover, as I talked about with the SPX, we measured in gold, so to speak, and you see that break and that break lower there, it also tells us that we have a new regime coming where gold will have a new role. So I think you're going to see that the situation here for the world will shift. You're going to have a new monetary. You'll need to have a monetary reset at some point, where this mess, I would call it, with money just being printed left and right, is going to be needed to be tidied up and we're going to have a new situation there. And I just don't think we're right there yet, because I do think that this will happen into what can become a stagflationary environment at a later stage. But at this point here, I think the bust will change this direction. So I think there is a lot of front running, as I said, with silver and gold. And does that mean it will not happen to the 30,000? No, I think there's going to be a pullback, but then I think you're going to see a strong bull market continuing after that.
So what is you feel that the dollar is going to get stronger as we go into 26? What will cause that? What will provide that strength for it?
I think the entanglement of the dollar in everything. So you're pretty much, if you have debt in the world, you're pretty much short the dollar to a certain degree. And you'll see also that is happening when the floor opens up and you start to see some of the valuations, the peak valuations are going to come down quite strongly if you get this bust that I foresee. You will see that the dollar is going to strengthen, because a lot of the debt in the world is simply denominated in dollars, and that means that it will go through the dollar. And even though the dollar is a quite can I call it a quite dirty shirt these days for various reasons, I would say
I'm sorry, Henrik. What did you call it? The dirty what?
A dirty shirt. Just, I mean,
A
it's
dirty
because
shirt.
it's just still the cleanest shirt out of all the shirts out there. So you're wearing those shirts saying I pay in dollars, and I got one that says I pay in Danish kroner, or whatever. And mine is probably, with the euro, I probably think that structurally it's not as sound and as strong as the US dollar. So even though we have seen a lot of monetary debasement here, and that's going on continuously, I just think it will be a game of a relative game versus other currencies of the world. And you can go from the situation where we're at right now, where you have to pay your debt off in dollars, straight to a gold situation. And that's where I'm thinking, I think the dollar is going to peak into what would be the unravelment of, or the unraveling of everything that we have in terms of a bubble here. And come the next move from the Fed, which clearly is going to be, they're going to fire all the money they can at this to prevent it from happening. Well, you're going to see that that is going to put the dollar in a very big decline. So I expect the dollar to reach 117, 120 and the on the Dixie. And just remember back in January of this year, everybody was bullish the dollar. And I was actually saying, I think we're going to see 96, 97 on the dollar, on the Dixie. And here we are. So I think we are getting closer to a bottom in the dollar, and the dollar is going to make a comeback that I think few will understand. And we'll then see, after that, because I think actually by the end of the day, it will be the strong dollar which the Fed is going to be reacting to. And when they do, then I think you're going to see a completely different kind of scenario in terms of gold and everything else. And I think there will be a commodity boom that is unlike anything you and I can remember. I think it'll be quite amazing to see the real assets starting to move a lot higher in the coming years. So I am very bullish the dollar at this point here. I still think that it has just a next leg down, just a small one, but then I would be long the dollar, not short it.
Do you so when you say when you anticipate the commodities, starting to climb,
Mhm.
what I mean, so that at that point when the commodities start to climb, that means the dollar will start to weaken even further, correct? I understand.
Correct. Yes, yes. I think we're just a little down the road now. So when the dollar, we have to anticipate or to understand that this is a situation where the dollar has been strengthening from the current levels of 96, 97, and to, let's say, 117. That'll be quite a move. We haven't seen those levels since 2001. So if I get that right, you will have a lot of headwinds for risk asset and for crypto and for commodities. So I think there's going to be a next leg lower in commodities and in also in gold and silver. And that will be the pullback that I'm talking about before we see the real bull market taking off. Because you can still say that gold is moving fast, but I'll have to say we're not moving anywhere near as fast as it did in the stagflationary era we had in the late 1970s. If you look from 1977 to 1980, you'll actually see it moved up 5 times since in that period. And if you look to the last 5 years, we're not looking at 5 times. We're looking at a nice return, obviously, but we are not looking at 5 times. So I think we have the first leg in what will be a very, very strong leg when we get to the next phase. But before that leg comes, we will probably see kind of a pullback because of a strong dollar.
When I hear this, I think to myself, just regular people that go to work every day, 8 to 5, 401ks,
Yeah.
own a little house, have a little bit of money in this savings account,
Yeah.
if they have a savings at all, they're going to get crushed from all this.
Yes. Unfortunately, yes. And I think honestly, this is the very sad part of the story here, because you and I can sit here and have these theories and talk about it and thinking, okay, and we can maybe be good or clever enough to put some money into it and make a few bucks. But the sad part is that the majority of people in the world is not going to like what was going to happen. If I'm getting it right, we are at the peak moment now in terms of employment, and we're going to see that coming down. We're going to see that we get a lot of unemployment. The Fed will then come out and then potentially trigger something of a stagflation, and you're going to see a period where people see that there will be rising prices in the among in the groceries that they buy, but they will see that they probably lost their job, or the spouse has lost his or her job. So it's not going to be good times. It's going to be very, very bad times. So that's unfortunately the bad side of the monetary easing that has been going on for 16, 17 years, since 2009, 8, so 17 years. We kind of thought that we could create wealth by printing, and we gave Bernanke a Nobel Prize for that. But by the end of the day, you can't print wealth, and you can create something that is a perceived wealth. But when that cracks and it starts to come down, you're going to see a lot of people actually losing out on that. And it will be Mrs. Johnson in the US, unfortunately, the ordinary person going to hopefully having a job today and then trying to make ends meet, that is going to pay for that, not just in the US, but also Mrs. Jensen here in Denmark or elsewhere in the world. And that is the sad part of the story. And I think there are so many, you know, um, things you can compare this to. And I think, people don't like this when I go too back in history, but there was a time before before the French Revolution where actually they did exactly the same. They actually went out and printed, and they printed what was called Action Nova back at those times, and they created a boom for some years. But guess what? Prices eventually started to go up, and that was actually one of the reasons you saw the French Revolution. I'm not calling that there's going to be a revolution. I'm just saying that if prices go up and people feel bad, then you're going to have discontent people, and I fear that's what we can have, because when you have that, a lot of bad dynamics can set in motion.
Well, and the difference between that time and today is we're we're a global market. We're all globally connected.
Yeah. Yeah, but correct. But I can say that it's just something that you're going to see all over the world. And I think, when you're in the US, I was in Africa last summer, and I thought we had seen inflation here in the Western world, and I can tell you, when you went down there, you would see some of the prices they had gone up, quite a lot as well, or much more actually, and people were struggling with that. So I think the global connectedness is not something that's going to save us. It's something that is going to be even more difficult for people out there, and especially if you start to see a strengthening dollar, because as I said, a lot of debt in the world is actually denominated in dollars. It will not be a good situation if you get something like that, and I hope I'm not right about that part, but let's see.
So when you say this, and like I envision people are just going to get crushed, but I try to think through this, and I'm like, okay, look at like let's say a blue collar neighborhood, right, where you're at or where I'm at, and again, people going to work, track homes, community of say 50,000 people. When
Mhm.
this takes a hold, what do you see for that community or for that neighborhood? Like empty houses, they can't afford mortgages, um, crime going up, or I mean, what is your
Well,
definition of
well,
crushed?
yeah, but I think you're already seeing the beginning of it today, right? Because if you look at the housing market in the US, and obviously you live there and you live in the heart of the US, as you told me just before, I mean that's you probably see that it's very difficult for people to afford a home. And I think that is one of the things that is actually already telling us that things are bad. And why is it difficult for people to own a home in the US and these days, and also here in Denmark for that matter? Well, it's because inflation has been going up. So we're probably 20% above the levels we had back 5 years ago. And your wage hasn't been going up with the same. Probably your home has been rising in price, but problem is not a lot of people can actually buy a new home, and that means that if you look to the existing home sales, you're going to see that that's actually in the gutter. You haven't had this low existing home sales in the U.S. With for many years, and you have to understand that it's a the larger the population, the more homes will needs to be sold. But the amount that we're seeing today is just ridiculously low compared to the size of the US population these days. So what you're going to see probably is that it's going to be worse. People are going to get forced to sell their homes because they will potentially lose their jobs, if I'm right on this bust that we're going to see. And this may not have anything to do with them, and it may have to do with all the money that's been printed. But unfortunately, it's going to hit people that are living, um, on a normal salary, and like most people in the world do. So I think you're going to see that some communities are going to get hit really hard by this, and unfortunately, that you'll see that it'll be difficult for them to sell their homes. Some of them will have to go foreclosure, and you'll see that people lose their jobs. Unfortunately, you can think the financial crisis, and I have to say, I think this one is going to be bigger, simply because you don't have the escape situation or possibility you had back then, which they took by printing money for some time. This time, the debt in the US, the debt in around the world is much greater. And you can go to a certain level, and then you'll see inflation starting to come out. And I think everybody can tell and see that we have seen inflation. I don't think it's just going to stay low if they start to print money just again. I think that money is starting to circulate. So the situation is going to be quite different. There will be the same kind of situation like in 2008, but they don't have the same option as just going out and then let's print money and then everything will be fine.
Well, and I was talking to my friend Matt Smith about this last week, and we were comparing where we're at now to 2008, and he and I agree with him that this has the potential to be much worse. And to your point, to what you just said, but also look at our society. how much it's just
Hmm.
deteriorated in,
Hmm.
17, 18 years. We're so
Yeah.
po- we I mean we people just don't get along. There's no respect, there's no
No, exactly.
courtesy.
Exactly. Yeah, there is a thing to that. I also noticed that actually, and I think, and I'm saying something that especially Americans don't like, and I'm not a Marxist, but Marx actually talked about that. He didn't forget about his socialism and all Marxism. Forget about that. But the thing is that when you see the debt of in the world is going up and down, that is actually what you see is going to put a pressure on people. And we have to acknowledge that today people are feeling that kind of pressure because of all the debt that we have in the world. And that is I mean, that was just his theory. I just didn't want to take credit for it. But I'm not saying his solution is correct. I would say it's not correct because I think it can lead to something quite different. But I'm just saying it is the right thesis or the right analysis to say that when debt goes up and down, people are getting crushed by that, and that is what we see today. I think a lot of people are working really hard, and if as I can see it in the U.S., the numbers that I'm looking at, people are working two or three jobs and still find it difficult to make ends meet. And I saw an analysis: 15.6% of the U.S. population find it difficult or very difficult to put enough food on the table, which is not good. That is higher than going into the financial crisis. It's something that is such, and yet you have the extremities or the extreme rallies in Wall Street. I mean, it's just so diverse right now, and I can see that's probably also what you're talking about.
How will these governments then respond when, if and when, and we hope we're wrong about all this, right? And this is just
Yeah,
a,
we definitely hope that. I would take that, happily.
uh, how do you think these governments around the world are going to respond when this occurs? Because, Henrik, people are going to be pissed. And when
Yeah,
they get pissed, they do stupid things.
right, correct. And I don't know. I don't know how. I mean, I am not on. If you're a great politician, I would say so. I don't know how they're going to react, but I think I know that when people are coming under get under pressure, they're going to react because they it's not a lot of people say, oh, it's my fault, and people look inside and say, I need to do this, this, and that. I think people find they'll point to whoever that is in power, and I mean, like Trump or not like Trump, I don't. It's not about this, but I think unfortunately he will be blamed for this because actually this is something that goes back 16, 17 years in terms of what we have done in the central banks, and I think that is what a lot of people are going to miss because seeing the connect between these two are not. So I think the politicians are going to take, and even today's politicians are going to take the blame for what has been many, many years of mismanagement from the central banks. But I fear that this is something very few people will actually be able to connect.
Yeah, that is my biggest concern when people have asked me. I don't fear a nuclear war. I mean, I've always laughed when I say this. If there's going to be a nuclear war, put it right where I live because I don't want to live through that.
No.
If there's going to be solar flares or magnetic poles, earth shifts or any of that, tectonic plates, also do that where I
Uh,
live. God,
yeah,
if
exactly.
you're
Yeah,
listening to this, please
yeah,
put
exactly.
because I don't really want to survive that. I don't know about
No,
you,
no,
but
no. I got same. I got just. I'm with you on that.
which I kind of laugh when you hear about these billionaires and they build their bunkers. I'm like, okay, if it really
Yeah,
got to that
yeah.
point, you think these engineers are going to listen to the billionaires anymore? They're just going to kill them and take over their bunkers, right? Wouldn't
I hadn't
you?
thought of that. Yeah, right, right, right.
But my biggest concern is when because people don't understand, they're not going to understand or grasp or you know
No,
any of this. So as their 401ks start to maybe financially those dollars will be there, but it's not going to be worth anything, or job losses. Trying to sell their home that they can't move because there's nobody to buy it. Uh, you know, refrigerators are empty, kids are hungry, bad things could happen.
exactly. And I don't have the answers to what can happen. I think it can be very different from different in different countries. But I know that it doesn't take long from the moment where you can't feed your children or the electricity goes out or something like that to people start to fight. So we don't want that. We definitely don't want that. And that's the situation where if people get poorer and they get hit by rising prices and they see their 401s also declining in value. What are people what is certain people, what will they do? I mean, and of course we will see a reaction from central banks. We'll see a reaction from the administrations around the world, but it's things, if they become really bad, it takes a time for these to heal. And if I am if I'm right in what I'm saying here, then this is going to take some time to heal. I mean, it's a major tops in the stock market can take a long time. I think it took 19 years for the before you saw the top in the stock market in the Nikkei, the massive rally there, and you saw actually took 19 years before you actually get somewhat of a bottom and it started to move up again. It can just take a very, very long time for this to happen. You saw it after the depression as well. So, and this is just the stock market. It doesn't mean that when the stock market is starting to come up, it's great for people because ordinary people can lose a lot of wealth and just being able to support their families. So again, I definitely hope I'm wrong on this, but I can just see the patterns developing into something that is better than worse than most people can anticipate at this point.
Well, and will this is this where UBI, universal basic income for people that might not know, might play a part in it, and also it makes you wonder too, because during COVID it was so easy for them to deposit money into our accounts. I mean, I think it was
Yeah.
like 600. They didn't even ask. Like I didn't even
No.
need it, and they
No.
just.
No. Exactly. Yeah. Yeah. Same. Yeah.
What was it in
No.
Copenhagen?
Yeah.
What was it in Copenhagen? Do you remember how
We had
much?
some kind of savings. I think everybody had to save over the years to some. I was for I don't know for retirement, and there was some extra savings they just forced upon us back in 10 years ago, and then all of a sudden they just released it, and they gave it like was it 2 months worth of salaries or something like that to just pour it on us. And most people actually didn't lose their job like that, so you got these extra 2 months, and then all of a sudden if you have the population, and we are just a small population, but anyway, people went out and they spent that money because you're sitting at home, you all of a sudden you get these 2 extra months. What are you going to do? You're going to spend it. And that's why, of course. So yeah, UBI, we definitely, I mean, it could be something. I don't know. I maybe not be clever enough or to see what kind of solution. And again, will it be a solution or will it be something short term? But I definitely think that it's going to end with something of a monetary reset, a reset where we simply say, okay, enough of this, where we simply think we can print money. We need to get back to sound money at some point. And I think, as back to what you said in the beginning, that this is what we start to see. Gold is behaving or snapping up, I would say, right? So I think we could see that development. That's also what I'm saying into in 10 years time from now, I think gold will be a completely different place. The path to that I may differ on with certain people, but I think you're going to see it at much higher levels because the only thing that the central bankers and the administrations can do is simply to somehow try to fix this, and fixing it will require first a lot of printing to kind of put enough money into those potholes in the economy, and then you're going to see that certain assets are going to react on that, and I think that will be gold, silver, commodities, and so on.
You had said in some of your other interviews that the Fed is too late. They're a day late, a dollar
Yeah,
short at this point.
yeah, I think they're way too late. I mean, you can just look at their history, and also if you look to the rest of the world, the rest of the world right now is cutting like there is a recession coming very soon. I mean, we're 200 and some cuts into the financial crisis at the very peak of it. There were 100 some, 180 some into the COVID situation. And now we are 160 for the rest of the world, where the Fed has, done a few of them only. So we are actually seeing that the rest of the world have engaged in a lot of cutting in the central banks of the rest of the world. And I think the Fed has become so scared of what they unleashed in terms of inflation. Actually, was basic economics back to the situation. We got these money put into our account, and we sat at home. People couldn't go to work. You get supply is actually diminishing, and you get demand is pushing up. That gives you price increase. That is 101's economics. And then all of a sudden, the Fed is now spooked about what they have set in motion. And rightly so, I can say, because they should have thought of that. But the problem is they have set it in motion now. What they now try to do is to quell that, inflation, or put the genie back into the bottle. The problem is that is real people that they're hurting in that process. So that is people sitting there with their mortgage loans, their car loans, and whatever. And if they are getting squeezed, by this, they stop spending. And if they stop spending, the U.S. economy will decline. And when the U.S. gets a cold, the rest of us get pneumonia. So I think yeah, they are way too late, and they have caused the situation, and now they are afraid of the inflation level, which, by the way, if you look at it right now, it's a 2 point, was it 2.7 or 2.9? I can't remember, 2.7 or 2.9 in terms of the CPI, last CPI number. And If you look into the financial crisis, it actually spiked up to around 5% in 2008. But few people will argue that we had an inflation problem in 2008. We actually had a deflation problem, and it came only 6 months later, which was where the Fed all came out and just pumped money into it. So right now we're looking at a situation where the business cycle and the job creation and so on is rolling over, and the Fed is spooked of 2.7, 2.9%. I think they are. I don't know what they're looking at, but it's just weird for me to see that they can look at the consumer confidence levels, and they are just plunging, and the affordability and so on, and then they are worried about 2.7, 2.9%. I think they are horribly late, and that's what hurting a lot of ordinary people these days.
What will the Fed's role be in all this, both in the short term and the long term, as Trump, will appoint his own person next spring?
I I think short term here that they're going to eventually find out that all of a sudden it seems like on the last time Paul spoke that we kind of see now we don't have a strong job market. Guess what? You haven't had that all of 2025 or maybe the first 2 months, but actually since then you've had meager numbers in job creation actually, which already points to a very sharp slowdown. And I think that they will now, pivot. They will come out and they will cut again here in October, and they may even start to do some panic cutting, not in not too distant future. Will it help? No, it will not. Because back to Mrs. Johnson, she'll sit there with her $100 bill that she's maybe saving on the monthly basis, and then she'll say, "Do I want to go spend this now, or do I want to sit on it because I actually, just saw inflation and I saw my husband losing his job." That is back to psychology. That is back to what she will do. In 2008, people saw the money that they could save and they started to spend it. I think today is that the debt levels have changed. I think today that the inflation that we have seen has changed the psychology of people. And that is going to also change the way the behaviors when all of a sudden Mrs. Johnson stands with her $100 saved bill in her mortgage loan or whatever it is. So that is the whole psychology game that I think the Fed is I don't want to say ignorant or oblivion about, but it's really important because if she doesn't, and actually if she doesn't take that $100 and she goes down to the bank and says, I want to borrow another $100 because now then I had two, and then I can go buy, some things, a bigger thing. Well, then it's not going to work. Then QE is not going to work, or whatever they're going to call it, is not going to work in the real world, which is back to Mrs. Johnson. It may be that the stock market will say, oh, fantastic, we got more liquidity and it's going to go up. But guess what? The stock market is not driving Mrs. Johnson or whatever, because the 70% of the U.S. economy is based on what what the consumers are doing, and they will not start to spend. And that is where you see the disconnect, as we see today already, between the S&P and the real economy. So the disconnect can just become bigger. So I can't even remember why I'm just blabbling here. But what was it? The question was actually.
You answered it, but what I was going to
Okay.
what I was going to throw in with that with the Fed, I said, what's the Fed's role going to be in all this?
Oh, the petrol, yeah. No, so they probably they will do what they always do. And when if we start to see any kind of bad headwinds or bad declines in the stock market, which I think we will see in a not too distant future, well then you will see that the Fed at some point will say, okay, now we step in. Now we see that things are turning bad. Problem is, what will the effect of that become? So the Fed will try to step into that role of being a demigod that can kind of sprinkle a little money on things and then everything will be fine. I just think that this time is going to be different.
Well, don't you find it interesting right now with the government shutdown? They don't have to report the BLS numbers either.
Yeah, yeah, yeah. I saw that. Yeah, and I was more waiting for these because my model's been telling me we should see a kind of a decline this year. And when we saw it in April, May, June, I was like scratching my head and say, why is it we don't see the kind of bad numbers we should be getting out? Remember, we got 144 or whatever it was. I think there was even a number of 270 at something in the first revision. And then all of a sudden, August came, and boom, we saw the big revision going all the way back, and all of a sudden, we do not have a strong economy. So I never trust the first number that comes out from the non-farm payrolls, but it will be interesting to see whether we could see a first negative number for this year in the first number that we get. And I think it was a possibility. So if they keep this away now, well, if the Fed gets sees that we have a negative number of non-farm payrolls, they're probably going to have to step in a little quicker. And maybe that is what's going to drive this final boost that I see is currently ongoing in the stock market, but I think can even increase in terms of intensity.
I think of the simple expression "fake it until you make it," which you could apply to
Yeah,
many different things.
yeah.
But I think it's more apparent for what we're talking about right now. Fake it until you make it.
Oh, there is definitely there is a yeah, but let's see if they fake it until they fail. I think it maybe can be rewritten this time around because they kind of faked that you can create a new economy that can blossom and things will be fine. And this is the beautiful Keynesian theory. You'll lower the cost of borrowing, and then you'll see people start to spend more, and the more spending of this then going to create higher GDP levels, and more people will be hired, and you got a positive spiral going. The problem is Keynes was actually asked also at some point and said, "What is happening at the point where you have been stimulating all you can, and inflation and interest rates are at zero? What happens then?" And his only answer to that was, "In the long run, we're all dead." But guess what? That is the situation we're in. That if you ask the Japanese economy, that is the consumers, that is the situation we're in. You got perfect valuations. So the whole balance sheet side is actually zero interest rate at some point. We know we're not there yet today, there today, but the problem is that the valuation levels are still mirroring what we had in terms of that. And the whole situation we have in the different assets that we have around the world with crypto and everything is just booming because money was free for such a long time. And it doesn't go away overnight just because inflation went up a little. So I think you're going to see that unraveling. And that is where fake it until fake it until they fail. And I think that that's actually the fail we could see, which would be the big the big bust here of the everything bubble, and where the Fed actually will be a little very powerless in terms of what to do. Because when inflation goes up, what will they do? If you get stagflation, you can't stimulate into that situation.
Well, and you also you look at the jobs market, right? And especially when you're talking about the corporate world, how many of these
Mhm.
jobs are just utter nonsense, in my opinion, where they serve no purpose and they're not needed.
Yeah, but I mean, obviously, when you get a situation where valuation levels are extreme, then you also see that there is a kind of a distortion of where people are going. So if you can see, oh, I can go to this technology company, AI company, which has an extreme valuation, and if I put my job in there, my efforts in there, I'll earn a lot of money and I'll be part of the boom. Obviously, AI is going to be the future, and fantastic. It's going to be, create, the next productivity leap of this world, I'm sure. But we also see extreme levels of that. And if we see the whole crypto side, and we see brainy people going to that industry also, and a lot of people getting sucked into that, well, that's a distortion of human capital as well. So you see, as you say, some of these businesses that are coming up and saying, well, do they actually have a raison d'etre? Is there a reason why they would be here if it wasn't because the rates have been so low for so many years? And I'm seeing the same. I think there are people that are being hired into strange positions, whereas there are very productive and needed for industries out there that need good people as well, but they just find them very difficult to find because they are so expensive.
Well, I told this story several times. I was in Virginia this summer and happened to struck up a conversation with a guy, and he was a engineer for Amazon Web Services, and saying how all these data centers that they're building all over the country that they can't
Mhm.
find engineers, like they
Yeah,
can't
yeah.
hire them.
Right. No, there you go, and that's the kind of distortion. So, and that is actually why we have interest rates also as a kind of a moderator on us. Because if you have if you have $1 million, and some people have a lot more than that, but if you have that and you say, okay, if I put it into something, if I want to get a yield every year, I want to get a return on a yearly basis, and you see that the interest rate on we can call safe bonds are very low, you rather go and say, well, I don't want to have 1%. I want to see if I can find 3%. And then you have something that comes up in the office, you maybe 3 or 4% with some kind of fancy product. And people, of course, start to divert into that direction. And I think we've just seen that distortion. And that's why we need to have that business cases can support more than just 1 or 2 or 3%, or actually 0%. And it's just more about how many people are flocking into buying that asset. We need to get to back to healthy money where you have a healthy interest rate, and that will help us also take away the distortion that you're mentioning there. Because I think a lot of people actually can't find a job because it's been sucked into some of these fantasy industries that is going on right now.
We talk about job hiring and jobs right now. I had a friend that applied for a position, and this was amazing to me. The first round of interviews was done virtual, but the questions came across to you on a screen, I think,
Hmm.
and then you had to
Hmm.
respond on camera.
Okay.
You weren't
Okay.
you weren't speaking with a person in the first round.
Oh, wow. Okay.
You ever heard of that
I
before?
haven't heard of that. No, I never heard of that. First time I hear it. Okay, interesting. But that's, I would say that takes away a lot of the most important part of a leader, that is actually that you talk to people, because there's so many things that is not just about knowledge. It's about actually also understanding, what is that, type of person good at in so many different situations also. I think it's easy, a little too easy, right?
Because then they're just using AI to be able to look for those keywords to
Yeah,
decide at that
yeah.
point whether to move you forward to the next round.
Yeah. Oh, then it's easy, because then you'll just have an AI on the other side with your phone, there, and you just type it right in, and then you get AI to respond to AI.
What, in your view, then is going to be the most hit industry wise from these job losses? AI, tech.
So I think there are a lot of businesses out there that has been first of all, I want to say AI is going to change the world, no doubt about that. It's going to change the world just like the locomotive or the steam engine did in the 1840s. It's going to, as much as electricity did in the 1920s, or the car or radio or whatever. It's going to create fantastic opportunities, also like with the internet, and what did, obviously. What is the problem is that every time we see these technologies come out, we have the fog of, or the confusion, or the fog of confusion around the technologies, because people don't really understand how can we use this, and then there'll be a lot of speculation in certain directions, and some of it may could be correct, but a lot will be speculation about what can this actually develop into. And we saw that in 2000 as well. And we saw some of these businesses that we don't even know of today because they don't exist any longer. They were the darlings of the Wall Street back then, and it actually was the same, as I just said, in 1840s in the UK. It was the same in the 1920s. So I think you're going to see some of these businesses, that there will be some fantastic new businesses that has actually just started. The new Amazon, the new Google, the new whatever. We see them; they are there, and they will go, into the stratosphere over the next many years. But could we see kind of a pullback into when we have the largest bubble, as I see it right now? Sure, because you could see that people were also laid off in large volumes back after the .com. Did that mean that we did not see a technology coming out that would change the world, or that people would be hired into tech and like that? No, we did not, because they did change the world, and people are hired. And maybe if you don't even know about the internet today, you don't use it. I mean, who doesn't? Who doesn't these days, right? So of course it's going to change the world. But the only thing is, I think a lot of these businesses have surpassed what, or some of them have surpassed what it is that they actually need, or what the demand can be in a real world. And you'll see, or a real demand, and you're going to see that pullback for some of them, and others are going to completely vanish or and disappear, like what we've seen before. And I think most of the crypto market are gonna think, I think you're gonna see a lot of those businesses are gonna get hit really, really hard. So I think there's a whole industry there, and you talk about. I think that industry is going to take a hard beating when that top is in. I think there's a lot of projects out there. I'm not good enough and intelligent enough to point out which ones that will be the right projects, but I can promise more or less that it's not going to be in the thousands that we see today. And that's why I think the real businesses will have to come out of that. And the ledger, the blockchain technology, and all that will change the world, no doubt. But it's not going to be that. So if I had to guess, I think there will be in the crypto industry to begin with. But I think the outcome of what we see from AI and from the ledger blockchain technologies are going to influence what we see in the world of lawyers and the banks and so on. Obviously, it's going to change the world there, but it's not going to be in a straight line like most people think. I think it's going to be first through a bust, and then you will see the real technologies starting to come up and starting to make an advance into traditional businesses, and also make new areas of businesses and new industries also obviously.
That's why I tell people, what career should you go into if you're just, getting out of school, 18, 19. I'm like, be an elevator repairman. I don't know any elevator repairmen. And there's so many. Do you know any elevator repairmen?
No, I don't. I mean, there's always the same guy who signs it in Denmark. So at least his name is Schindler or something.
All right. So you know one. I've never met an elevator repairman, and there's a lot of elevators out there. You're never going to be out of work.
No, exactly. There'll be enough work there. Yeah.
And if
Or
it's
divorce lawyer.
and if it slows down, you can maybe cross train on an escalator.
Yeah, exactly. Exactly. Yeah. No, but I think there'll be something about this getting back to more of the real world. Honestly, I think there is a lot of fantasy going on right now, and these fantasy are going to some degree to develop brave new world. Obviously, new technologies, new opportunities, new productivity levels for a lot of things. But there will also be the need for some of the industries that we today see as a little neglected because of the focus on everything that needs to be tech oriented, right?
What do you anticipate then for to if we're going to go back to the standard of some of these blue collar positions? How will supply chain trucking play a part in all this? Because to your point, if inflation goes up, I mean that could open up more to supply chains potentially breaking, right? And just the costs associated with that. So where do you see that portion?
Well, I think I think technology is going to support us in many ways, and it's going to put a price pressure on certain industries. Obviously, I mean, when you get driverless cabs driving around, well, how many drivers do we need? Honestly, can we get the same for trucks? I mean, I actually sat with some friends. I think it's 10 years ago this year, and I said to them, in 10 years' time, you're going to see driverless trucks. And I was probably wrong there, but we're getting there. And obviously, there will be things that processes and things that we can see that like just when we had robots interfering also with our supply chains in the car industry back in the days of Ford, we would see that people were actually standing there in the line and doing different things on the what do you call that, conveyor belt or whatever you call that, the belt that, and then today you see it's just robots doing that thing, and I'm sure that you're going to see the same thing with AI. A lot of businesses are going to get hit. I think that in many businesses, I'm not sure it can be in the physical, but there's one thing that you cannot be. You cannot, I don't think you can get AI to create something that is a fantastic, piece of carpentry or something, and do something that with your hands. So I actually think there could be a reason why you could see some of these more traditional things actually thriving, because people will say, yeah, I can get, a robot to do and to cut things up, but to actually to make a beautiful furniture from scratch is something quite different. So I think there could be something like that. But again, we need to look into the upper end of these services. And like also with lawyers, there will be a lot of things, processes, activities that lawyers are doing today, and they put in, junior people to do. Well, you can put AI to do some of that, and actually you can get the better response and much faster. So again, what do they need to do? They need to move up in the value chain, or the what you can call the refinement chain, and make it even more refined or more specific. And I think that is where we need to go as humans. We need to understand that AI is here to take away a lot of the more ordinary tasks that we have. And then it'll be more about us as with our creative minds that we move up higher and we can better at seeing the parallels between things and being creative. I don't think we have been outperformed yet by AI there. So that is where I see things going. And but it is a danger, and not dangerous, but it's a brave new world, at least. Also with music can be created all the way from scratch from AI and so on. So I don't know. I don't have the solution to that, but I can see we need to up our games as human beings to be able to compete with what is coming out. Just think 5, 10 years from now.
I definitely think you will see more entrepreneurs. All right, people will,
Yeah.
from an individual standpoint, and also with that, I think people realize that corporate America, that these jobs are meaningless, and they don't want to go through the misery of it any longer.
Yeah. Yeah, yeah, I think you're right. I think you're right. So hopefully it'll be something that is for the greater good of a lot of people. But I think there will be a lost generation. I mean, I'm 50. I could be in that lost generation if it wasn't because I use AI already, on a daily basis. And we've seen that over and over again. When things are changing, new technologies comes out. It's often the people that have been living in the former world and actually see, oh, I can change. I don't know how can I use a computer? How can I even, start to think about AI? And that will be a difficult task for a lot of, and that there, as a society, can we just see that there will be a lot of old people, and it can be like just 50 years old and upwards, saying, oh, I can't handle it. I don't know how to work with this. I think it'll be a task that a lot of people, a lot of societies and communities will see that people can find themselves not being able to do a job that couldn't be done by something that is cheaper.
I think, see, I'm 47, so you and I are in that same category, and I think where this is heading, our generation is going to feel the brunt of it.
Yeah,
Because
yeah.
we're, well, I
Sorry.
didn't mean to cut you off, because we were the last generation of kids to play outside. We knew a better world.
Yeah.
We knew a better time.
There was a time where we didn't know when I was actually talking to somebody yesterday that when I went on Interrail and then Interrail where you cross with one ticket and with to the train and you just jump into any train around the world and somebody said, so how did you actually then get in touch when we did that? I was 18 years old or something. And how did you get in touch with your parents or with them? Well, we may call home. We called home once or twice during that month we were away. And it's like today, you have been messaging, 10 times, by the time you reach the border of one country, right? So, and you've been sending pictures and so on. So yeah, it's a different world, and and we can be lost. We can actually, but also we can say it was a good old days. We always say that, right? But sometimes it also shows that these times can be better for certain reasons. But yeah, I agree with you. There are things that they are being. If you put a group of my daughter, she goes to what they call in Danish. It's just to translate it directly, call it after school. So she went to for 9 years of school, and then she goes to a school where they more have fun for a year. They have, certain things and certain topics, and they do a lot of sports, which is great, and they have good fun. But you know what they do the first 14 days? They take away their mobile phones because then otherwise everybody will be in the same room and just sit and look at the mobile phones together, which they do often, right? So I think that was good. And she said, Dad, it was actually fantastic. The first 14 days, we actually talked to a lot of people. So yeah, I can definitely see what you're getting at.
I have friends, Henrik, that are my age, or our age, 47. They still look at their kids' locations that are in college. I said, "You're kidding me. You're still looking at what
Hmm.
your daughter is doing every day, like
Yeah,
where her
yeah, yeah,
location is. She's a young
yeah.
adult."
Yeah, yeah, exactly. Yeah, but that I hear you. And there are people that want to do that because they now you can and you want to, but it's also not good, right? It's not a good thing. So no, I think it's a brave new world, and I'm actually very optimistic. I mean, now it sounds like I'm such a big pessimist on everything, and it's just going to crash and all that. I actually think that the world will become better, but there are some big structural things that we need to look into, and the things that we have something on the financial markets that is way overstretched. We have been printing too much money for a long time. But I think when we can get past all of that, I think that the world from a technology perspective can become a better place. I hope we as human beings can then take it in and actually then seek to some of the more traditional values that I also hold dear. And but yeah, I also find myself looking at the phone a lot, right? So I'm not too different.
Yeah, me too. If I was 2 weeks of not having it, I mean, that first day would be there'd be some major
Yeah,
withdrawals going
exactly.
on. Um, Now, you talk about crypto.
Mhm.
What is in your perspective then with Bitcoin? How will you see all these people that are out there, talking about Bitcoin? It's the future. It's decentralized. What is your view on that?
My view is that um, my view is that the letter, the technology is going to change the world, no doubt. It's a checks of balances, which will help us trade more, which will help us make it more comfortable to actually, shift ownership of something with somebody we don't know, because we can then and on the internet as well. So I think it'll make it a more interconnected world. It will also increase visibility of what's going on, and I think some of the governments will like that a lot. But I think I think it's a fantastic technology, and I think it's going really to help the world in many ways. But I don't think Bitcoin or crypto and the way we look at it today with cryptocurrencies and it's going to replace the currency is going to be the way forward. I think you're going to see Bitcoin may not have an asset which of the future. It depends on what happens into this very, very severe decline that I see come for Bitcoin. I think there is a bubble in it. I want to say it as it is. There is a very, very large bubble in Bitcoin at this point. And I understand people think that this will be the foundation for, and it'll change, it'll become the reserve currency of the world. I don't think it will. I don't think the US government will ever give up if they can avoid it. And I don't think it will be something that will be taken over by, some, independent. So I don't think Bitcoin will have that place. People call me naive. I think you're going to see the place of Bitcoin will be decided how far it drops into the coming crisis. And if it gets as far as I think it can, then it can become to something that is maybe not as interesting. We also have to understand that there are central banks there right now working with CBDCs, and if they come out, they don't want to have competition. So if we are going to see something of a reset of the monetary system, I think we'll have to do something with gold at the end of it. It will be something of in a basket where we see, we will in different countries will kind of have to say, well, we'll look at how much gold you have and we have, and we can put that into a basket and say what is the rate you're going to be. But of course, there's going to be a digital element to it. Do I think Bitcoin will come and take that spot? No, I do not. I cannot see that. I can see it as maybe having a place as an asset in the future. And I actually don't care too much about that now. The big financial institutions are saying, oh, we got to get into Bitcoin and all that. I mean, those were the institutions also telling us to buy pets.com back in the days of 2000. So I think they're going with the flow. And their first initial reaction back in the days were that they were against and they couldn't see it. All of a sudden, they have to move with it because it's very difficult to go against the crowd. If that turns, if we get a deflationary bust and dollar goes to 117, 120, it will crush Bitcoin. And if Bitcoin is crushed to the degree I think, then we'll have to see how much of an asset it's going to be in the future. But as a digital currency that is going to take over the reserve status of the world, no, I don't see that.
What do you envision then? The price of Bitcoin, I don't know what it's at today, 118 or 119,000 or something.
Yeah, I crossed 125, but I think it's just a little lower again. But I'm not sure where that is at right now. But something around that level.
So in that range of 120 to 125.
Yeah,
Would you see it getting sliced in half?
I think it's actually going to be much worse than that. I think technically, if you look at the structure of it, there is a very clear pattern to it. And if I get it right, and I want to say that if it tops out around between 148, 168 in that area, and starts its descent from there, then it could be a very big decline. And I don't think it's going to stop at 50,000 or there. So I think you're going to see something that is sub 20,000 at least, and maybe even sub 10,000. People don't like to hear that, I know, but the problem is that if you see the size of the bubble that we have right now, and the NASDAQ could decline by 85%, every time you've seen NASDAQ decline, you've seen Bitcoin decline by even more. So if NASDAQ comes down 85%, which is not unrealistic. I mean, at this time, with these peaks, with the market capitalization at these levels here, 80% is not unrealistic. And we saw it in 2001. Bitcoin is going to crash by 95%. And if that's the case, we're down to the levels that I'm talking about. So I think we are the Bitcoin is the very definition of a bubble right now. I don't think it's going to be the asset that is going to transform to be the foundation of a financial system. I think a lot of running into it, but we also see it just requires one or two of the big whales selling out, and then you see Bitcoin crashing. And into a financial deflation that I'm talking about, and basically going to 117, 120, there will be a lot selling there because liquidity will be everything. So I would caution people here not to fall into that trap of that this time is new, this time is different. And also just think that the US government right now cannot afford to lose the reserve currency status. If the situation is as it is right now, and again, I've been living in a world where the dollar, the strength of the dollar and the Pax Americana has been benefiting me, my family, my country for the last 70, 80 years. I take that, I give that. And that's why I'm a big supporter of the US, let's call it the US model that we put up after the Second World War. You're going to see that it's going to the dollar is going to, sorry, the US can simply, the US government can't allow that the dollar is losing its reserve currency status at this point. They may allow that it's going to, we have a revision of it, but simply to see that it's being lost like that over, no, I think that would be very difficult, because then you would see with the kind of deficits that you have in the US, that the US people and US citizens, they will have to pay a lot more in tax simply to make ends meet. And I think that is probably why it will become, very uncomfortable. And again, as I said, I've been living under that umbrella for like so many other Europeans, and we need to get our act together and all that. I'm 100% with that. But I just say that I don't think it's something that the US can just afford to lose. So that is one thing. People say, Henrik, they cannot afford to have a recession. Well, I say, well, they cannot counter that. But what they can counter, and I think the US will, is to lose the reserve currency status like that. And you've seen actions of that before as well. So I don't think you're going to see Bitcoin just coming up and all of a sudden taking that over without a struggle. And you've seen how gold was made illegal back in the 1930s. Could we see a situation like that? I can easily envision that.
The at that point, if this occurs, will Bitcoin become boring? And I asked it in that manner because I was talking to my friend Melody Wright, and we were talking about housing. And I
Hmm.
don't know if it's like this where you're at, but people, mortgage brokers, they're all make it fun, own multiple houses, be an investor, and at some point the housing market's
Hmm.
just going to become boring again. You're going to buy a
Yeah.
house, you're going to live in it. You're not looking as an investment; it's your home.
Yeah.
Um, I mean, do you see something similar to that occurring in the crypto world?
I know I'm going into deep waters here, because there will be a lot of people that maybe will be not liking what I'm saying, especially when we see Bitcoin standing, where it is. And I also, as I said, see a strong rally just ahead of us. But
That's all right. Henrik pissed people
I,
off. That's okay. I get all the
uh,
boomers mad whenever I criticize them. I
right,
get
right, right. No, but I just want to look at it just in you don't understand Bitcoin. Well, it's not so much to understand, and well, it's you can also just look at the history of Bitcoin and look at how fast it can crash. What I want to say, I think it can become a collector's item, more like that. It can be something that that's what I'm saying, is that there is a risk of it if it loses so much in value over the next coming bust here, that people simply will say, okay, why would we trust that? Why would we trust something, if I'm right, that can drop by 95% like this? Where's the safe haven in that? Why is that a good thing that you see something going up like this and coming down like that? I don't think that is something that we could build anything on. But do I understand that the ledger down beneath and the blockchain could actually be something that can change the financial world? 100% yes. 100% yes. But do I think it'll be Bitcoin? No, I don't think so. So I think you can see that people will cling on to it and think this is fantastic. And maybe in that world where it becomes digital gold, and I want to see it, the world, I would be buying it first. If I can see it bottoms out, at very, very low levels, but I can see there is a buying there and people just don't abandon it altogether, then I could see a future in it. So I actually see that in two ways. A big crash is going to really be telling us, do we have something that is a real asset that will be there for a long time frame, or will we have something that was, fun times of the, and people say, yeah, but it's been here for so many years. Guess what? The tulip crisis what lasted for almost 5 years, and it was just freaking tulips. This has lasted for 12, and it's just a financial world where it came from nothing, and it's really the last 5 years has been just shooting higher. So I think we still need to see that really big shakeout and that test of it, and then see what it can become. But I know it's not a very famous argument.
They're gonna all come after you, Henrik. The Bitcoiners are gonna come. They're gonna come for
They
your
are.
head.
They will. Yeah, I know. I know. But
Uh,
hey, as I said, there are two outcomes to it, so I'm kind of double guarding myself there. But it needs to prove itself into the crisis. That's my point.
the gold people are much more patient than the Bitcoiners are not
Yeah.
tolerant of any type of
Oh,
dissent
exactly.
or any type of
Oh,
questioning
exactly.
of authority.
Exactly.
My last question for you, and it's kind of off topic, but
Hmm.
somewhat related. One of the things I've
Hmm.
always wondered, and I'll be curious what your response is, but professional sports franchise teams have always gone up in value, right? You always notice that
Hmm.
people buy, groups buy professional sports, whether it be in America or in Europe, and you see some crossing over, and they never go down in value. Do you ever
Mm.
see any type of like, you've seen real estate market crashes, bubbles
Yeah.
in a lot of different industries. Do you ever envision that in like professional
But
sports?
It doesn't have to do. I'm not. I mean, I used to do athletics or so track and field, but it's but I not really followed the valuation of these things. But probably it has to do also with the investors that want to buy into this. It's just well, they stay away from the times where the things are bad. Whereas people who has to need to sell or buy a house, they have to be in it both when it's bad and not bad. So I don't know, but probably in bad times you would see that the valuations would be more difficult to actually get out, and they just are not, the transactions are not getting done there as to the same degree. But what do I know? I don't know. That's if that's the setup.
Yeah, it's just you always see. I mean, like the Lakers recently were sold at, it was, I want to say 10 billion was their valuation.
Yeah,
Like they always go
yeah,
up, and
yeah,
if
yeah,
I mean everything, nothing is bulletproof or immune from a fast decline or a huge
yeah,
decline. But I've never seen
yeah.
that in professional sports.
No, no. But it's not, as I said, it could be that no transactions like that are really done at the bottom of a crisis or at the crisis when it'd have to be people that are really seeing some value then and then getting in with it. But normally you will see it also when there is a surplus of cash or profits out there that can go in and buy these teams. But I don't know much about it honestly, to
Yeah.
be frank.
I was just curious. It was just
Yeah, sure.
yeah. Where can people find you?
So on X at Henrik Zeberg, or on Substack at Henrik Zeberg as well, and also there with my company Swissblock, and we have certain we have various reports and things that we do to help support people in the coming rally that we see in crypto, and also to understand macro, where I have a service that will help people to understand the outlooks of on the macro side. So that's where you can find me.
And for people that want to pay, want to subscribe, people to go out and support Henrik, support what he's doing, and he's doing some great work. So I appreciate you taking the time to come
Thank
on
you.
and talk to me. And
Mhm.
for people that are watching this or going to watch it, feel free to comment on YouTube. I read all the comments, YouTube, Rumble, all the audio
Yeah.
ones. I read those too. And then I do early access for all my paid subscribers on Substack. So if you value the show, please
Yeah.
consider becoming a paid subscriber. Henrik, I look forward to our next conversation. Mic drop.
Thank you.